Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Getting funding is a make-or-break moment for startups, and seed and Series A rounds are where things get real. These early stages determine whether a business scales or stalls, yet many founders stumble through the process without clear guidance. In this video, you'll see how seed funding kickstarts a startup's journey, while Series A fuels its growth, with real examples showing the difference. We'll break down what investors look for, how much capital to expect, and why these rounds matter more than you might think. Whether you're pitching or just curious, understanding these basics puts you ahead. Understanding seed funding. Seed funding is the first official money a startup raises. Think of it as the fuel that turns an idea into something real. This early-stage capital helps founders build prototypes, test their market, and gather enough proof that their business could work. Without seed funding, most startups never get past the what-if stage. Investors at this stage take big risks, so they're betting more on the team than the idea itself. You'll often see angel investors, accelerators, and even friends and family stepping in. Some startups also use crowdfunding or pre-sales to get their seed round rolling. The terms vary, but seed funding typically comes as convertible notes or safe agreements. These let investors put money in early without setting a fixed valuation. Startups use the cash to hire key people, refine their product, and get those first few customers. It's all about proving the idea before going after bigger checks. Key players in seed funding. Not all investors are the same at this stage. Here's who you'll likely encounter. Angel investors. High net worth individuals who back startups early, often with personal connections. Accelerators and incubators. Programs like Y Combinator or Techstars provide funding plus mentorship in exchange for equity. Venture capital firms. Some smaller VC funds specialize in seed stage bets. Friends and family. A common but risky source, since personal relationships are on the line. These players look for passion, speed, and a team that can adapt. They know most early ideas change, so flexibility matters more than polished pitches. How to attract seed investors. Getting seed funding isn't just about having a good idea. You need to show momentum. Here's how to stand out. Build a clear pitch deck. Keep it under 15 slides. Problem, solution, market size, team, and traction, if any, matter most. Network relentlessly. Warm introductions beat cold emails. Meet investors through events, mutual contacts, or accelerator programs. Leverage accelerators. Joining a top-tier program fast-tracks credibility and connects you with investors who trust their judgment. Show early traction. Even small wins, like a working prototype or pilot customers, help convince investors you're worth the risk. Speed matters. Seed investors often decide quickly, so make your case fast and leave room for their input. Common challenges in seed funding. Raising seed capital isn't easy, and many startups hit the same roadblocks. Valuation disputes. Without much revenue or users, valuing a startup becomes guesswork. Some deals stall over disagreements on worth. Limited traction. Investors want signs of progress. If you're still in idea mode, it's harder to convince them. Investor competition. The best seed investors have endless options. Standing out means showing why your team can execute faster than others. Unrealistic expectations. Some founders overpromise just to get funding. Smart investors see through this. Focus on what's actually achievable. The key is balancing optimism with realism. Investors know early-stage startups pivot, but they want confidence you can handle the unknowns. Navigating Series A funding. Seed funding gets you started. Series A gets you scaling. At this stage, investors want proof that your business isn't just viable, but ready to grow fast. While seed rounds focus on potential, Series A is about performance. You're no longer pitching a dream, you're showing a roadmap to revenue. The jump from seed to Series A isn't just about bigger checks. Expectations shift. Investors now demand metrics like monthly recurring revenue, customer acquisition costs, and clear product market fit. They're betting on your ability to execute, not just ideate. Preparing for a Series A round. Before hitting the fundraising trail, make sure your startup checks these boxes. Refine the business model. Seed stage experiments should now translate into a repeatable revenue model. If you're still pivoting wildly, investors will hesitate. Demonstrate scalability. Show that growth isn't accidental. Highlight systems like sales pipelines or automated onboarding that prove you can handle more customers without breaking. Assemble a strong management team. Solo founders face tougher scrutiny. Bring in seasoned leaders to fill gaps in product, sales, or operations. Hit meaningful milestones. Traction matters. Whether it's recurring revenue, active users, or consistent growth, have numbers that back your pitch. What Series A investors look for? Investors at this stage aren't charmed by charisma alone. They dig into three core areas. Metrics that matter. Revenue growth. Low churn. Healthy unit economics. Team dynamics. A founder who hustled solo during seed might struggle in Series A. Investors look for complementary teams. Market potential. Your market should be big enough to justify the investment. Show how you'll capture it. Pitfalls to avoid in Series A. Even promising startups blow their Series A by making these mistakes. Overestimating valuation. Aiming too high can scare off investors or lead to endless negotiations. Ignoring unit economics. Growth at all costs works until it doesn't. Fuzzy growth strategy. Break down how you'll spend the money to hit specific targets. Weak due diligence, prep. Clean up legal and financial loose ends early. Seed funding tests ideas. Series A tests execution. Nail this transition, and you're on your way to becoming a market leader. That's the overview of seed funding. Stay tuned for part 2, where we'll dive into Series A rounds and real examples of how startups scale. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.